Start investing in corporate bonds. Investing in corporate bonds offers great returns in the end. In fact, it offers a higher return than government bonds and other forms of securities. Here, as a bondholder, you loan money to a certain company for a fixed period of time in exchange for an annual interest rate. If you decide to invest in this kind of bonds, here's a guide you can follow. Understand the different aspects in corporate bonds investments. The important things you must understand about corporate bonds include price, yield, coupon rate, and interest rate. Each of them is related to one another and can tell you the future for your investments. For one, if the price falls, the yield is very much affected. On the other hand, if the interest rate falls, the price goes up and then the yield drops. Take some time to learn about all these aspects and their relationships before you get started with your investments. Know how you prefer to invest in bonds. There are two ways on how you can invest in bonds. The first one is through bond mutual funds and the other is through individual fund purchase. The first one has multiple bond issues for your investments, which means there is a lower risk here because your shares are managed by professionals. However, this kind of bond gets some part in the yield to cover most of the expenses and the profit margin. Meaning, you will have lower returns here as compared to getting individual bonds. Research more about the bond mutual fund before you invest with them. If you opt to invest corporate funds with bond fund, you must evaluate the fund carefully first. As much as possible, read the prospectus and understand important details such as effects of changes in terms or management of the bond fund. You must also evaluate their performance for the last 3 or 5 years and compare them with other funds of the same kind. Lastly, the most important thing to look out for when evaluating a fund is the expense ratio. If a fund's expense ratio is lower, you can expect to get more earnings from your shares. Evaluate a company first if you plan to purchase individual plans. It is important that you purchase bonds from a credible company. You can check this by knowing the company's ranking. If the ranking of a bond is high, it is a better catch because it offers lesser risks. Otherwise, there can be a lot of risks involved in the bond. However, lower-ranking bonds can offer higher yields in the end despite the risks. Open your own cash account with your choice of broker. This is another way to invest in bonds. This is something very easy to do because it most likely is as easy as opening a checking account. However, The minimum deposit is usually $1,000. To open an account, you have to furnish personal information, identification, net worth, place of employment, and income. Once you have an account opened, investing in corporate funds is as easy as placing an order. Investing in corporate bonds is a great business decision. However, this is not always true, especially if you make a mistake in the process of investing in bonds. Therefore, it is very important that you always make the right decisions when it comes to making your investments.